Time now for Money Watch. International world leaders pledge billions of dollars to Ukraine's reconstruction, and American, British, and Chinese interest rate policies are all pointing in different directions this month. CBS News foreign correspondent Ramy Inocencio joins us now from London to talk about all this. So, Ramy, the Ukraine Recovery Conference just wrapped. Where you are, what's the takeaway?
Yeah, sure. Hey there, Vlad. Leaders from 60 countries and about 400 companies attended, and President Vladimir Zelensky beamed in digitally from Ukraine. The goal here was to keep up all that economic support that has been going into the country for recovery and reconstruction. And the big number that dropped here is $54.5 billion. This tranche is coming from the European Union, and it'll start in 2024 through 2027. There you see it on the screen. The U.S., for its part, committed another $1.3 billion. But remember, that's on top of a lot more, $60 billion that Washington has already pledged. The U.K. committed more there, $305 million on top of nearly $4 billion in guarantees for World Bank loans. And Germany also pledging another $416 million there. It's a lot of money, right? But the total cost for reconstruction, guys, is more than $400 billion. And that's at the lower part of the spectrum, according to the World Bank and the United Nations and other organizations. That could easily hit $1 trillion. So we still have a lot to go, especially if this war continues forever, how long it will. Aside from those numbers, there was also talk about a new war insurance framework, and that came from British Prime Minister Sunak. War damage, of course, and destruction, keeping companies from going back into Ukraine. But this potentially sets a stage that, you know, if you go in, your investments or some of your investments will be insured.
Yeah, on this side of the pond, Ramy, we were all sort of a little relieved when the Federal Reserve decided to pause interest rate hikes. And usually what we've been seeing is that the other banks around the world follow suit.
Right.
And then everyone was shocked that the Bank of England actually increased interest rates. You guys got a hike over there. You know, bigger than expected. What does this mean for the British economy?
Well, shock is the word that has been used over and over today. And I'm just looking at the markets. The FTSE 100 is down at its lowest point right now as we close out our trading day. And that was after a steep drop yesterday from that surprise hike. And what it means for the British economy, the chance for that recession here, higher again and even likely. There you see it. Consecutive rate rises, 13 in the past 15 months. Economists earlier, though, this year were breathing a sigh of relief, saying the economy might just avoid recession. Now they're saying maybe, actually, it's going to happen sometime later this year. Economists had forecast that 0.25%. It was up by 50 basis points. And that's because higher rates here crush demand, but that is the point. There's so much demand happening that's pushing up inflation. Crush demand, though, means prices fall, means profits fall, and it means a hit to economic growth, though, and then, of course, higher unemployment. But if we're thinking that there might be a breather sometime down the road, turns out that the Bank of England, its voting members, voted 7-2, 7 people in favor of that 50 basis point hike, and they said they're ready to hike even higher by the end of the year. Maybe it could be up as high as 6%.
Here in the U.S., of course, as Anne-Marie said, the Fed paused the hikes earlier this month. And that was the first pause after 15 months of back-to-back increases. But over in China, the central bank actually cut rates. What do you think about what China is doing?
Yeah, the arrows, depending on which central bank you're looking at, are pointing every which way, right? But we can look at this in terms of demand. In the UK here and in the United States, demand for goods and services is really still too high, hence the high inflation we're talking about, hence the higher rate hikes. And the Fed is forecast to start hiking again in July, even though there was that pause there for you guys. But in China, the demand is lower than what Beijing needs. And I have to look back at the start of this year, right? When they ended COVID zero, everyone was thinking, oh, it's going to give this boost to China's economy. We're going to be out of the woods. We're going to light the fire under the economy. But that right now is not happening. Its leaders were hoping that that would just restart the economy. It's now fizzling out. A bunch of factors are playing into this. Factories, they're quietest this year. Exports down 7% around the world because of slower demand from other countries. China's domestic property market cooling off too, down by about 7% in this past year. And so hence that rate cut by the People's Bank of China. But, you know, analysts say that that wasn't big enough, and so more cuts need to happen. And, of course, those do need to happen because if China goes down or if its economic growth slows down, of course, it'll impact the rest of the global economy.
completely. Ramy, thank you so much. Have a good weekend, Ramy.
Yeah, you bet. Take care, guys.